This just in, apparently housing bears could go extinct as the property market turns bullish. I'm going to go over the latest article released by property spooker king Christopher Joy and his thoughts on why property bears are going extinct and also his reasons why he thinks the property market is going to boom. He said, CBA and Westpac have discarded their dire outlooks. Capital economists believe home values will surge 7% higher next year. ANZ, NAB and UBS should roll over soon. Do you agree with this? In terrific news for the recovery after the pandemic, house prices have started climbing again across 6 of Australia's 8 capital cities and throughout non-metro regional markets. Great news guys, our properties are going to go up, we're all going to be rich. Yeah! This accords with our forecast in March for the local market to suffer negligible losses between 0 and -5% over a 6-month period, following by capital gains of 10 to 20%. 10 to 20%? I think that is being very bullish. I don't see how it could go that high with all the risk in the economy right now. What do you think? Throughout Australia's 8 capital cities, the cumulative loss to date has been just 2.8%, according to CoreLogic, and would have been a lot less were it not for Melbourne's entirely unnecessary second lockdown. Well, what he has to remember there is the reason there haven't been losses is because a huge amount of printing and intervention by the government, and the pain actually hasn't been felt yet. People have been making more money in the recession and the issues are only now starting to mount up, like customers ghosting banks, mortgage holidays coming to an end, JobKeeper, JobSeeker being withdrawn. The real test for the market will only be early next year. In September, dwelling values recorded capital gains in Perth of 0.2%, Canberra 0.4%, Hobart 0.4%, Brisbane up 0.5%, Adelaide up 0.8%, and Darwin surged 1.6%. So I agree there, things are turning around in these markets because they're a lot more affordable than Melbourne and Sydney. But what you need to know is Melbourne and Sydney make up the majority of the housing market. So if those markets decline, it's going to have a much greater effect on the economy. Home values also appreciated in all non-metro areas 0.4%. The tide is similarly turning in Sydney, which registered its smallest capital loss minus 0.3% since the market rolled over in May. And I do agree, the regional markets are definitely doing better and will probably do better in the short term than the metro areas because a lot of people are leaving the cities. And you know, if there's not all the work there in the cities, why live there? If you're on JobKeeper, JobSeeker, maybe people are going to say, look, it's too expensive for me to live in the city, I'll go rent in regional. And also people, maybe they'll be able to work from home, or, you know, the commutes are going to get faster as trains get more efficient. Who knows, maybe in the future we'll have driverless cars and, you know, the commute won't become a big issue. Giving a jump of purchasing power care of lower mortgage rates and higher incomes, bullish auction clearance rates, and the advert of positive gearing where rents more than cover the mortgage repayments, we expect Sydney home values to start punching out capital gains again soon. And yes, it may start putting out capital gains soon because of the low interest rates if the RBA does cut rates again. And if they do ease lending standards and all of a sudden it becomes a lot easier to get a loan, house prices could rise. But then we also got the force of if unemployment rises, at the end of the day, if you haven't got a job, you can't get a loan. And if all these bad loans start defaulting and then, you know, confidence drops, they might want to buy, but they might say, oh, maybe I'll wait 6 months. And then that makes the problem even worse. And then prices start to, you know, fall even more. So there still are a lot of risks there, and you know there's many more, just like the SMEs, debt mounting up. They've got a lot of loans, you know, that have been frozen. They're mounting up, and a lot of SME owners own homes as well. The lag is coming from Melbourne, where dwelling values fell another 0.6% in September, making for a cumulative loss of 5.5% since its March peak. Yet, with Melbourne likely to come out of lockdown shortly, stability should return as the auction market comes online. So what do you think? Do you think that Melbourne will start to turn around? I know a lot of people are wanting to leave Melbourne, go up to Brisbane or, you know, Western Australia, and maybe that's the reason why their markets are doing good, because people in Melbourne and Sydney are wanting to move there. And you know, there's just so much issues that are happening in Melbourne right now, and there could be a short-term boost to the market, but all these, you know, factors in the economy, like unemployment rising, businesses, you know, being shut down, or even if they do reopen, they're not going to be operating at full capacity. So it just may not be viable to keep going. Australia's resilient housing performance has again made a mockery of consensus extremely bearish forecast for large price falls of 10 to 15, 20 and 30%. And somebody needs to stand up for the housing bear community. Us housing bears, we just want equality. And I feel like housing bear is a negative term. And I think a more accurate term would be property market skeptics. And I think it's socially unacceptable to be referred to as a bear. And I do feel for the bears out there to always be put in a negative light while the bulls get all the privilege. All the bulls have been getting the privilege for too long, and it's time for the bears to be put in a more positive sight. What do you think about this huge issue of 2020? Housing bears are becoming an extinct species, with the likes of CBA and Westpac discarding their dire outlooks for much more bullish perspectives. This triggers me. We're becoming extinct? No, we're not becoming extinct. We just use logic, and we use free market logic. In a free market, the housing market would crash, but guess what? It's not a free market. It's 100% manipulated by the government and the banks. 58% of Australia's wealth is tied up in housing, so nobody wants to see it go down. But guess what? If we just keep putting more and more of our money and more of our wealth in housing, it just makes the problem worse. And you know, an investor would tell you, do not put all your eggs in one basket. You want to diversify your economy, because then it means that if the housing market goes down, the whole country goes down. And this is why the government is now putting more money into the housing market, because they have put most of their eggs in one basket. And so if they do neglect the housing market, it will have a wealth effect on everyday Australians. They won't feel as wealthy and they'll stop spending. And we're really backing ourselves into a corner here. The latest bear to drop is Capital Economists, which was anticipating losses of up to 10%, but now predicts only a 3% contraction, and next year believes home values will surge 7% higher. Other bears like ANZ, NAB and UBS should roll over soon. Now I'm starting to see a trend here. Every time the housing market is at risk, the banks will put out these forecasts, housing market to crash 30%, Reserve Bank will put out housing market crash 40%. You know, they'll say, oh, you know, we got to act now, it's going to crash. And so all of a sudden the government's like, oh, it's going to crash, we need to act now, and the people that own their houses are like, no, we can't have a housing market crash. And then so that they put all these schemes in place, like removing responsible lending laws, creating more first home buyer schemes, lowering interest rates to save the housing market. And then all of a sudden the banks go, oh no, everything's fine now, when really they use these articles to put fear out there and to make the government act and to make the people want these interest rate cuts. And that's how they manipulate the market. They're not stupid, it's corrupt. Australians have a lot to be confident about, given our exceptional management of the pandemic, save Victoria government. I do agree there, Victoria has done a bad job. Overall, Australia has done a lot better than the rest of the world, but we still do have more to improve on, especially Victoria. And given the enormously successful policy coordination between the Commonwealth and the Reserve Bank of Australia, Treasury, key regulators like APRA and ASIC, and other core banking systems. So something you have to think of here is Christopher Joye. He's an investment hedge fund manager, and I'm sure he's got property under his investment umbrella. And he's saying this is great. Well, it's great for those people like him that have multiple properties. But if you got one property, it doesn't really benefit you unless you sell. And then all of a sudden you have to pay, things like 2% in commission, advertising fees. And then if you go and buy another property that's more expensive, it doesn't really help you out. He's saying this is all great news, but it's only great news for people who have multiple properties and for the banks and for the government. It's not really great news for those struggling to try and buy a home. And do we really want to keep spruiking on homes where people, it's something people need? It's a necessity. I think they should leave speculation to the stock market and precious metals and crypto, and they need to have an affordable entry point in the housing market. I understand some markets will become more expensive because wealthy people want to live in those areas, but even now, the affordable areas in the worst suburbs are still becoming unaffordable. Remember all the doom and gloom about the September JobKeeper cliff, which this column argued would be a non-event. And maybe that's because he's been advisories for the governments and he's got insider information. So of course he can put out all these predictions and be right when you're on the winning team and have access to information that the everyday Australians don't have. So it has been proved. Well, guess what? They are starting to reduce it, and it's going to be reduced in March. And so we have to wait actually until then. Sure, it's just been a week, so they're not going to be felt now. We'll have to wait until March to see what really happens. Prime Minister Scott Morrison, Treasurer Josh Frydenberg, RBA Governor Philip Lowe, APRA bosses Wayne Bryce, and lenders like CBA's Matt Comlin have risen to the occasion and done outstanding jobs. We could have not asked for more. Here he is, kissing the government and the bank's butt He's praising them because he's all mates with them. He's worked with them. He's worked at Goldman Sachs. So he's saying, great job, great job. Yeah, it's great for the wealthy. It's great for those that own multiple properties. But all those struggling, to buy a home, and even if you own a home, like I said, if you sell and you upsize, you're really not, benefiting much. And the only way you're going to benefit is if you take out equity, and then you're in more debt. And while there is much negativity about population growth in lieu of the absence of net overseas migration, I would fade this as well. We've encouraged the government to embark on a war for top global talent and capital, positioning Australia as a destination for choice for new migrants and also key Indo-Pacific trading and financial services hubs. So there we go, he wants more immigration, but we've got such high unemployment now, it's just going to make the situation worse if we have more competition for those struggling to find a job. Morrison and Frydenberg have given every indicator they're going to do exactly that. He says Australia should be able to start welcoming both foreign students and migrants back early next year. A flood of money and people will likely come in from embattled Hong Kong, Taiwan and mainland China. And yes, it would help the property market. They bring wealthy migrants in because housing is becoming so unaffordable. The everyday Australian can't afford to pay $800-900 million for these properties. The canary in the coal mine is the Sydney property that went to auction last week with a $14 million reserve, which traded for $24.6 million. Allegedly 22 of the 25 contracts were Chinese buyers. Ooh, so there we have it. This is one thing. This is one property. So we don't know if they're really buying up all the properties, but geez, this is really how property price can get out of control, and this will lift the medium house price for Sydney if all of a sudden, wealthy migrants start paying double for properties like they were in 2015, 2016, 2017. I heard some people in the East that were in good areas near good schools, and and the Chinese want their students to go to the best schools, they will pay double whatever the price is just so they can get into that housing area. The upside surprise on housing is critical for Australia's AAA credit rating, which Standard & Poor's put on negative outlook. On April 8th, despite their nation's outperformance over the AAA countries such as Canada, Germany, Sweden, Norway and Denmark. So yeah, hopefully Australia doesn't lose its AAA credit rating, because that definitely won't be good for the country. S&P was predicting a 10% drawdown in home values, which will be forced to revise upwards. Other key economic variables like iron ore prices, the current account surplus and Australia's low 6.8% jobless rate have similarly surprised the S&P. And yes, jobless rate has gone down, but that's because people are getting jobs in the gig economy, which, they're not really high paying jobs. People, may have a job, but they're only getting a couple of hours a week. And Roy Morgan has underemployment around 22%. So there are definitely jobs out there, but they're not the right kind of jobs, and they're not the full-time jobs, that really create prosperity and wealth. So yes, high iron ore prices will help the Australian economy, but really, do we want to be an economy where all we do is build houses and dig holes? They were doing that hundreds of years ago. Surely we can do better than that. Some believe Frydenberg's overdue move to repeal Australia's ridiculous responsible lending laws, which bizarrely shifted legal liability for repaying a loan from a borrower to the lender, is a game changer that now rationalises a more constructive housing outlook. And I do agree, sometimes the banks were a bit too strict. Sometimes the responsibility does need to be put back on the customer, but also the bank shouldn't be giving out, 7, 8 times, 9 times income loans where they know that the customer will have a high chance of not being able to repay it over the long term. While the removal of the laws is certainly credit positive for the banks insofar as it eliminates litigation risks, APRA's much more prescriptive 34-page residential mortgage lending guide is far tougher than the obligations imputed by the law. So it looks like Christopher Joye is continuing to spook the property market. He's continuously to attack the property bear community. Now, I don't consider myself a property bear. I'm just a realist. I never said, the past 20 years, like some people that say every year it's going to crash, it's going to crash, it's going to crash every year. And then one year goes down, they go, look, I'm right. I'm a genius, buy my book. And the big question is, what if there's, another outbreak? Look what's happening in Europe. There have been more outbreaks. So there's just so much uncertainty. It's very hard to predict the market right now because, we've never been in a situation like this over the past 90 years. For all my loyal viewers and subscribers still watching, you're awesome. And if you haven't already, smash the like button for the whole YouTube algorithm. Really helps out the channel a lot. And if you haven't, subscribe for more awesome content on the latest property market news, Australian economy news, and of course, I'll see you in the next video.